Alrighty. Let's see here. The face cam doesn't have pro music. Apparently. Oh, it does seem like the music is playing, but we just don't have the spectralizer working. Hello, Ari. Also AI Wealth Academy. Oh. Looks like the live stream chat needs to be refreshed here. So let's go ahead, find sources. Oh, it's because I changed the name of the stream. That's why. Okay, everything should be working now. Or the chat on stream. Go ahead and send a couple of messages, guys. Let's make sure that this chat is working, because I want to make sure you guys can see what everyone else is saying. Let me turn down this music. Well, we got some record moves here today. We got some pretty big stuff going on right now in the world of FX. And we'll still be waiting for a handful of guys to hop in to the stream and say hi. Regulars, you know. Let's go ahead and transition over to the monitor. Okay, so before we get into this is from yesterday's stream. This trade was from yesterday's stream. Yeah, man. I absolutely was not expecting this kind of move, but you know, that's 250 pips. It's the largest single day move in Eurodollar since 2015. That is. This is the largest single day move, 2% in Eurodollar since 2015. Yeah, dude, I gotta be frank, I lucked out. I lucked out. I was trading the yield spreads and I stayed long. And I have to say this, ever since I built that yield spreads indicator, most of the time, trading against the yield spreads is a really bad idea. And considering the tariffs have been moving yields significantly for all these different countries, looking at the yield spreads, I thought was going to have a lot more noise. But, man, when those yield spreads go green, right? Like back here, remember during the first huge jump, all these yield spreads going green, 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 green. Then we had some more neutral coloring. And then in the last 3 days, yield spreads went more positive again. Look, guys, this indicator has been used for the last 40 years as a leading indicator of FX prices. It's not a perfect leading indicator, right? But it's a known quantity. And if you go and you read outlooks and research from banks or guys who know generally what they're doing, at least in the FX space, they will bring up yield spreads as a driver, as a component, as a factor in their analysis. I had EU, but it died with the account. Damn, man. Damn. Well, this is why you gotta trade in a way so that then you fight to see another day. Like, I had quite a few losers over the last few days. Like, the USD CAD trades got stopped. I have had these trades here stopped, like, way back around March. And this is just totally reverse those losses and then some. Now, don't get me wrong, it would have only taken me a couple of trades to fix those losses, but this is actually mind-boggling, right? This is a historical move. It's a historical move. And not only that, it's a tail risk move. And you know how I can definitively say this is a tail risk move? Because I have another indicator here that has the probability distributions with the percentiles here. So this part of the indicator right here that's drawn is the probability distribution of finding a high between any two prices for a trading day. And these little orange lines here are your quantiles. So this is your, or percentiles, rather. 50th percentile or quantile. Yeah, quantile. 40% quantile, 25 quantile. And up here is your 99th. All this right here is your tail risk. Yeah, man. Absolutely nutty. Now, I have one thought for the guys who are in my trading group who are using this indicator. Oh, there we go. Epic Pen just loaded. Thank you. And that's when the yield spreads in this kind of situation go super positive, or like back here. It can be really, really dumb to trade. Oh, for a second I thought my green screen turned off. I was like, the table behind me looks a bit funky. Here, I have to shift this over to the left so that then my webcam's not in the way here. Yeah. Because we're looking at this table here for some extra information. So yeah. Oh man, yeah, you can see in real time those yield spreads are getting even more positive. Man, oh man. Yeah, when the yield spreads are this positive, it's not, in my opinion, not worth trading against it. Because this thing can just go high. Like, we could be in 114, 113, 112. Like, we couldn't easily go another 100, 200, 300 pips when yield spreads are this strong and you have all these factors moving. You get a lot more speculation. And when you have a jump like this on top of these jumps over here in your historical volatility calculation, you're going to see elevate. I mean, don't get me wrong. People have already been expecting for several months that FX volatility was going to pick up, right? People been expecting that for quite a while. But now it's here. The FX volatility is here. This is the largest day on move in euro dollar since 2015. Huge move. Let's go ahead and check out the equities here. Also, I'm going to zoom in a bit so it's a little easier for you guys to see. Yeah, there we go. Also, if I do this, if I like, set up this as like a background thing, yeah, something like that. I got this panel behind me now. Yeah. So now would be a really good time for some questions while I look for stuff. Wow, look how green those things are. Also the Swissy. The Swissy's also doing. So let's go and check out dollar Swissy. Wow. Wow, wow, wow. Holy smokes. I wonder how the S&P is going to react to that. Wow. And this has been a more like a straight line down. Look at that. It's just a straight shot. Straight down. And don't get me wrong, these other currencies have been improving. Aussie rebounded, Kiwi rebounded, the pound is up 170 pips. But everything is getting overshadowed on the euro side. Hold on 1 second, I gotta sneeze. Okay. Let's see here. Do you have profit locked if thick down against any USD strength? I mean, I'm not gonna expect any US dollar strength at the moment. This is a scenario where this is probably gonna go on for a bit here. When you get this kind of move, it's very the volatility makes it hard to trade, but also we know that this is now kind of the beginning of a new regime a bit. Again, we can, like in the stream I said yesterday, over the weekend we're going to be getting more tariff developments. We have to see how tariffs are negotiated over the next week. That's going to determine if we stay at these levels or not. Now, if you want access to this yield spreads indicator, you go into the description and you start the 10-day trial for the trading group, because the trading group comes with all the indicators and it comes with all this other stuff. I'm not gonna, jazz it up and sell because, sure, I used it to make some money today and I did really well today, but I 100% bet there were some people who got caught on the wrong side of this. Like, okay, I get 100 pip drawdown, I get a 50 pip drawdown. This is the 250 pip drawdown. This is trading against this kind of move is how a lot of people go broke. Oh yeah, that's right. I had this meme already loaded. Shinzo Abe in the sky, seeing the 24% tariff still on Japan ride Donaldson. I just thought that was very, very funny. Anyway, we'll check out a couple of headlines here. EU vows to respond to countermeasures to Trump's 20% tariffs. France eyes US big tech and EU retaliation to Trump's tariffs. So Germany and France are expected to do some kind of retaliation. ECB's Stored Naras, I believe, Stored Naras, says US tariffs no obstacle to April rate cut. And we're getting some more breaking news here. dollar sell-off is intensifying as we head into London-New York crossover, with the euro rising as much as 2.7%, heading to its biggest daily advance since late 2015. The latest leg of the dollar move came as exotic option structures were triggered, with 111 barriers in the euro adding fuel to the momentum, according to Europe-based traders. So this is what I mean. Just we didn't start the fire. Let the thing burn. Let price play out. Let it do its thing. When you start dealing with this kind of stuff, it's either you have the information and you're in the know, and you're watching it closely to micromanage your trades. But when you don't have access to this kind of information, I don't. The next best thing is just, frankly, kind of trail a stop, right? That's effectively what I'm doing. I'm watching this. I'm watching the yield spreads. I'm like, okay, does this make sense to stop here? It's like, well, given this is an insane move, and after these kinds of insane moves, you can have more positive insane moves on top of that, depending on how these tariff negotiations go, which is why I have Financial Juice open here on the side. Speaking of, we do have a few things on the economic calendar coming out. Yeah, there we go. There's Discord. Let's see. Let's go to today. Coming soon. So in 15 minutes here, continuing jobless claims, initial jobless claims, Canadian PMIs, US PMIs, ISM Services. That's going to be the big one. So we'll see how the US fares on that. So at 7, that's in about a little under 2 hours from now. When this prints, if it comes out worse than the prior number, worse than forecast, if it comes at like 51 or 52, that's going to make the US dollar even weaker, and that's going to send US equities even lower. So far, US equities are holding up. I mean, there was this move that happened yesterday, this dump. Let's go ahead and check out Apple. That was one of the assets we checked out yesterday. Yeah, check that out. This is the aftermarket. UK publishes indicative list of potential products to be included in any UK tariff response to US tariffs. That just hit the wire. All right, let's check out gold. Oh, gold pulled back quite a bit. I certainly wasn't expecting that. And oil is just collapsing. Oh, yeah, that's right. Low growth, low need for energy. I mean, I gotta check something out here. Yeah, there's your peak in the distribution. I mean, we'll see. Maybe this is the low for the month coming in here. I'd be cautious calling it, though. I'd be pretty darn cautious. Yeah. If that is the high for the month right here, this red box, we have a lot of variance, and it's pointing closer to 64, 62. So I would want to be on the more... Oh, wow. Seasonally, 31% of the time, the top for the month comes in between R0.5 and R1. Okay, that's not good. Oh, and check that out. We have a probability gap on the monthly probability pivot odds. So either the low kind of comes in like immediately, or you go ahead and you have price move below that S1. And this just means, let's go ahead and turn on the strategy dashboard so I can get the exact number of years. Over the last 22 years of seasonal historical data, the low for WTI hasn't occurred between S1, S1.5 on the monthly. So the idea, the theory is crossing through S1 gaps and price falls into the next most likely zone, which is S1.5 and S2.5, this whole region here, which, guess what, encompasses that 64, 62 region I pointed out here. So I'll go ahead and draw an expectation on that. Let's go ahead and timestamp it. Oh, that's right. We're now, it's April 3rd, right? Yeah. And 05:19. That's the current time. All right. Let's see if oil continues falling from here and how well that expectation holds up. On the dollar side of things, oof. Yeah. You do not get your lows down here very, very frequently. Definitely want to be on the more careful side here with the DXY. Especially with either continuing to short it or going long it right now. There's all these extra geopolitical factors and all these factors going on with the derivatives, like Bloomberg pointed out. There's a whole lot of market participants trying to adjust their positions, adjust their portfolios. Look, if you don't have a smart plan, if you're not already positioned and know what you need to do to accommodate those positions well, you know, it's best to do whatever it is you know well to try and play it safe. Yeah, market-wide reset. Okay, let's go ahead and DAX went lower. DAC went lower. Euro 50 went lower. And it went... Yeah, all these European equity indices are actually getting hit pretty hard. Man, Nikkei got hit pretty hard too. Actually, I wouldn't be surprised if that could be the low, at least on Japanese equities. I wouldn't be terribly surprised. But we seem like we've never had a low there. So let's go ahead and load up maybe a chart for more historical data. Yeah, not a whole lot of higher highs that come in off this spot here. Yeah, this is going to be pretty hard for the Japanese equities. Oh, New Zealand equities are doing pretty okay at the moment. Go ahead and round that down a little bit. Okay. And how about Australian? Ooh, gap down. So New Zealand equities are holding up a lot stronger. How's Nvidia doing? Not so well. It's going to gap down when the market opens. Where's the weird? Oh, I think you mean the yield. On yen? Dollar yen? Let's go ahead and check it out. The total duration here on the daily is negative 1.379. Yeah, I'd be on the more careful side for sure. We could definitely see more large moves continuing this, depending on how all the tariff talk goes. Yeah, pound's probably a bit more straightforward. Probably another, depending on where you look, another 100 to 200 pips higher, but that's over the span of another 10 to 14, 15 calendar days. All right, let's check out. We got 5 more minutes, I believe. Yeah. 5 more minutes left till we get the first batch of economic data here. Yeah, we can check out the heat map. Dollar is just down across the board. Euro is pretty much up across the board except against Swissy. And Swissy is the big winner today. Swissy is up against everything in a big way. Yeah, the winner today was the Swiss franc, with Euro in second place. And the big loser actually was the yuan, but then the US dollar. Yeah, Swissy is where it's at. Let's do Euro Swissy. Check that out. Oh, it hasn't moved terribly, actually. It's only moved about 50 pips. Let's go ahead. Swissy, Aussie, and pound, and CAD moved quite a bit today. How is CAD holding up against the rest? Yeah, it seems like it's doing pretty well. USD CAD. Oh. You want the Oanda chart? Dollar CAD strengthening quite a bit. Or rather, weakening. The Canadian dollar is getting stronger when this chart goes down. Let's check out the yield spreads real quick. Yeah, those are pretty negative yield spreads. They're not the strongest, right? They're not like what's going on with euro dollar. Euro dollar is at 3.9. Wow. It just keeps getting stronger. It just keeps getting stronger. Can the macros keep the ball rolling? Well, I guess I'm going to need clarification on what you mean by that. As in keeping the momentum going here, like more and more upside. Excuse me. I mean, sure. that's why I'm like not touching this euro dollar long that I got on at the moment effectively. Why I'm not really playing around with touching it. What's the economic outlook? Honestly, that's what I'm looking forward to. Over the next 48, 72 hours, we're going to start to get outlooks from all these different institutions, and I'm going to be reading through all of them very, very, very carefully this week, because I'm certain, generally speaking, I have a rule of thumb. When large moves in a lot of asset classes occur all at the same time, and you have a stack of reasons for why those moves are occurring, everyone's going to have their own flavor of saying, oh, this is the thing we're paying attention to. Oh, this is the thing we're paying attention to. So there's going to be a bunch of people who have the things that they're looking at for their signal. That's why I say I'm going to be reading the outlooks and expectations coming out here quite carefully. As far as my own economic outlook, I'm just sitting on the sidelines at the moment. I'm going to wait and see how markets are going to react to new information. I did say, 30 seconds, by the way, until jobless claims come out. I'm turning on Financial Juice. They're going to read it off. Let's see how things react. 10 seconds.
$219K, $219K, lower than forecast, $225K.
Weaker jobs.
Continued claims, 1.903 million.
Oh no, jobless claims went
higher
down.
than forecast, 1.87 million. US trade balance, a deficit of 122.7 billion, a deficit of 122.7 billion.
For the US.
Which is lower than the expected $123.5 billion deficit. And Canadian trade balance is a deficit as well, 1.52 billion, a deficit of 1.52 billion, lower than the expected surplus of 3.5 billion. To the markets here, a little bit of strength come through in the Dixie, whipsawing in the S&P 500.
All right.
Fitch downgrades China to A, outlook stable. And again, Fitch Ratings downgrades China to rating A, outlook stable.
All right. Nothing crazy off the bat here.
China February trade deficit in this US trade balance report. A deficit of 21.17 billion versus January's deficit of 31.74 billion.
So, some good news on the U.S. employment side of things. But we'll see how well that holds up once ISM Services gets released. That's going to be the big kahuna today.
The US February oil import price was $67.90 a barrel, which is up slightly from January's $67.66 a barrel, which is up 1.4% from February of 2024.
Alrighty.
So Fitch downgraded China's long-term foreign currency issuer default rating to an A from an A+.
And DXY
Fitch say we forecast China's general government deficit to rise 8.4% of GDP in 2025 from 6.5% seen in 2024. The downgrade reflects their expectations of a continued weakening of China's public finances and a rapidly rising public debt trajectory.
Aussie and New Zealand not moving too much off the news quite yet.
The US Commerce Secretary Lutnick now speaking on Bloomberg TV now.
Oh, let's go ahead and pull that up.
Really, we are talking to all the trade ministers, but nothing really happens between now and then. What CEOs are thinking about is finally, let's think about building in America. You've got almost $5 trillion of commitments coming to America to build their factories. That number's only going to
Fitch
grow
say they
as people
forecast China
realize it's time
GDP
to bring
increase by
manufacturing home to America, where the greatest economy and the greatest market in the world is. It's time for America to stop taking care of every other economy in the world and building them up. Let's build the American economy up. Let's build American GDP, and you're going to see great growth from America.
Mr. Secretary, as you know, capitals around the world watching this program right now want to understand what they can do between now and then to avoid those tariffs. What do they need to do? Have you communicated any metrics to them whatsoever?
Well, we've been talking to the trade ministers of the major trading partners for more than a month, and we've been talking to them. And so you have to understand, and this is what's difficult for your audience to understand, that tariffs are easy to understand, right? We have a 2.5% tariff on autos, and Europe has a 10% tariff, and other people have a 20% or 15% tariff, and that's sort of easy, so they can all come down. But it's the non-tariff trade barriers that are the difference. Some countries have a VAT, and they take that VAT tax of 20% and they use it to subsidize the production of their domestic industries. That's why we can't sell cars there, because they give a rebate. Either they give it directly. One country told me yesterday that they give it directly to their car manufacturer to make their cars cheaper. That's why they sell successfully and we don't. Others take the money and use it and give cheap energy costs to this production, and that's why the steel industry, why is everybody else so good at steel and we're not? It's because their governments subsidize it. So we really need to change the way trade works around the world. It's tariffs, but don't get confused that these non-tariff trade barriers, they are the monster that needs to be slayed.
You've been consistent about this argument: subsidized production, manipulated currencies, foreign trade barriers, something the president addressed just last night. Can we just sit on the numbers just for a moment? The EU, 20%, 24% on Japan, 34% on China. Just what exactly was the methodology to go through all those different barriers to entry that you want to knock down? How did you come up with these numbers?
Well, the Council of Economic Advisors, you know, the PhD economists of the administration, coupled with USTR, the United States Trade Representative, they publish a book called Trade Barriers. It's about this thick, right? And they've been analyzing for decades all of these different tools that these other economies use to hurt America. Right? They won't take our corn in India. They won't take our beef almost anywhere. It's unbelievable. They won't take our agricultural products. They just treat us badly because we've allowed them to treat us badly. And when you finally go back at them and say, this has got to end, it's going to be tough for them because they've built their whole social network, their whole economies on basically exploiting America. And Donald Trump has said it's time for America to change that. It's going to be difficult for them to change that, but eventually America is going to be treated fairly, and the production of American factories is going to be incredibly strong growth, and you're going to see that growth reverberate through GDP. Remember, people forget the D, gross domestic production. If you buy a foreign-made Toyota, that is not domestic production. Making a car in America, that's domestic production.
Mr. Secretary, if we could just sit on the methodology just for a beat longer and address it directly. This is what we understand, what most people understand you did, that essentially you divided the country's trade surplus with the United States by the total exports, and then divided the number by 2 and produced this discounted rate.
Yeah.
If you're a trade partner right now, and you've just watched how America has put together that policy, how are you meant to negotiate with that? What are those countries meant to say? What are they meant to do?
The countries understand that their trade policies were exploitative an exploitation of America. Everybody understands. One country actually said to me, I was amazed that we were able to get away with it for this long. I mean, imagine that.
Can you share that country with us? Because they don't say this, they never say this on the record. You've got the potential, the option, the ability right now to share that with us directly. Of course they're not going to say
it on the record.
Who's saying that to you?
No, come on. Oh, stop. I mean, the country, one country told us that they give the subsidy to the car companies. Another country admitted that they give their subsidy to their steel companies. I mean, they're not going to repeat it on here. What's on here is that this is going to change, that it's time for these things to change, and they're going to be more fair, and America is going to do well. And in the middle of that time, all the factories are going to come back to America. You're going to see an enormous number of factories come back to America, or you're going to see incredible change globally. It's going to take time, but the factories are going to be built in America. That's the most important thing. Donald Trump wants to see steel and aluminum made in America so we can defend ourselves. He's going to want to see pharmaceuticals made in America. Who on your audience doesn't want us to make the ingredients for pharmaceuticals? Did anybody ever ask themselves why the ingredients for drugs should be made in China? Why is that? That's not cheap labor. That's that's high-tech
It's why getting stronger
in China.
here.
Why? Because their government helped create it. They created cheap goods there. They oversupply them. They drive the capitalist American who don't think like this out of business, and then they make it in China. And Donald Trump has said, I've had enough of this.
I think, Mr. Secretary, most people would totally agree with you. They would totally agree with you because China is an adversary. It is not a partner for the United States. Europe would make a very different argument. And Europe might be wondering this morning why they're being thrown into the same bucket as the Chinese. What explanation can you give them?
Europe does not treat our products fairly. They do not treat our companies fairly. They treat themselves incredibly well to the detriment of the United States of America. Right? It is time for them to treat us fairly, and that is the point. This is not, it's not free and fair trade. Their tariffs are higher. The non-tariff trade barriers are incredible. Like, I'd ask you, why don't they take our beef? Why don't they take our agricultural products? Why? Because they don't want them, because they want to make the money themselves. Why is it okay for every other country to feel this way, and it's not okay for America? I tell you why. Because we were the world's piggy bank, and Donald Trump has said our $36 trillion deficit, our $1.2 trillion trade deficit, $1.2 trillion. We buy other people's things more than we sell them ours, has got to be rebalanced. It's a national emergency. Let's fix America, and we can.
Mr. Secretary, for you it's beef, for the president I know it's Ford and Berlin's, but there are products that Europe takes, things like LNG, things like Microsoft services. Do you want to see balanced trade product by product?
No. It's not product by product. It's a big macro issue. Okay? Fairness comes when one decides that they can stop, they can't get away with it any longer. So let's make a great deal with the United States of America. Okay? They've got core issues. They have a VAT tax of 20% or 20. Europe has 21%. I mean, so when our goods are sold there, we pay 21%. They say everybody pays that. And then they use that money to beat us down in other ways. I mean, come on. We need to have fair trade macro, not product by product. But I think that the way Donald Trump looks at it is country by country. And what's going to happen is you're going to see domestic production grow. You're going to see interest rates come down in America. You're going to see growth in America, great jobs in America. Robotics is going to come to America. It's going to replace cheap labor overseas. Robots can make things. And you know what the job there's going to be? Mechanics who fix robots. Kind of like a high-end BMW, robots are going to need to be fixed, and those jobs are going to be high-paying jobs, and they're going to be here. We're tired of them being overseas.
For some countries, there's the 10% base, and that's the only levy that they were hit with yesterday. I'm thinking of the United Kingdom, I'm thinking of Australia. But those countries have a trade surplus with the United States. So why put the tariff on?
Well, I think the president understands that all of these countries, even if they have a trade surplus, if you dig into it, like, for instance, the UK, their trade surplus counts that they have this London Metals Exchange, and so gold and silver bullion going in counts. I mean, come on. That
DXY reversing now.
And Australia, which is a wonderful partner of ours, they buy a lot of our planes, right? And if you buy our commodity gas, I mean, that's really what you need, not really what we need to sell you. It's not the same. So the president decided, why don't we have a baseline of 10%? Okay, to really understand that everybody needs our economy. Our economy is the magnet of the world. Everybody needs our economy. Let's them pay coming in, and let's change that deficit of $1.2 trillion, and let's make America's economy grow, and let's balance that out. Let's fix that first, and then we'll go readdress the rest of the world. But we need to fix our trade deficit. $1.2 trillion. It's unbelievable why we don't have those jobs and the rest of the world does.
Treasury Secretary Scott Bessent told me last night this is a ceiling. Potentially we can see a different floor. Are you prepared to negotiate all of these rates? Is this truly the start of a negotiation?
Well, it's the start of a rebalancing of the way the world works. I agree with the Secretary that our view is that the only way these rates are going up is if countries decide to retaliate. But why would you retaliate against your biggest client? Your biggest client says, I want to reorder things. I mean, the United States of America is the largest client in the world. And yes, of course the countries are going to talk to us, but they talk too casually. They always talk about their tariff rates. I mean, it's like they say, oh, I'm going to cut my tariff rate. You think the reason we don't sell a car is because Europe charges a 10% tariff and we were only charging 2.5%? That was outrageous. But the key is they have all these rules. Like one of my favorites is the Koreans. When we made a deal with them in 2012, we took their cars, right, Kia and Hyundai, and we were going to sell agricultural products to them, right? And when McDonald's went to send in French fries, they wouldn't let them go in because we couldn't prove the origin of the potato. I mean, you don't understand the scale and depth of how they keep our products out. And Donald Trump has said, I've had enough. We are going to be treated better. America is going to be treated better. And that starts today.
Mr. Secretary, why exactly wasn't Russia on that list yesterday?
Because we have sanctions against Russia, North Korea, Belarus, and Cuba. And so we're not supposed to be trading with them.
Thanks for clearing that up. The additional question that other people had too about Mexico and Canada, they were also noticeably absent. Why were they absent?
Well, they are operating under a rule
dollar making a new low
for fentanyl, right? That they needed to close the border and stop fentanyl. And what that rule is that USMCA, right, the major trading is exempt, right? And the other products that they do have a 25% tariff. When that is resolved, so we're not going to double count it. That's just not the way it works. When that's resolved, they will fall into a model like this. But I think USMCA, in the order, USMCA continues to be exempted. So car parts, for instance, don't come with a tariff if they end up being finished in American cars. So if you're building your car in America and you're getting parts from Canada and Mexico, that's fine. The American cars still come with no tariff.
Okay, that's helpful. The additional question we had on just a few numbers, because we're all trying to make sense of this in real time, and you've got the numbers. What's the tariff on China now? The complete tariff, including everything. What is that number now?
Well, there was a 20% tariff because they continue to make the ingredients for fentanyl and send them out.
Okay.
Right? And those ingredients have the highest subsidy rate in China, meaning the Chinese government is paying these factories to make these goods, the ingredients for fentanyl, which is killing Americans, right? So Donald Trump put a 20% tariff on that, and now the regular trade deficit number, right? The analysis by the Council of Economic Advisors and the United States Trade Representative, we have a 34% tariff, so it's 54%. But when they stop making the ingredients for fentanyl, and I want to point out in 2019, President Xi told President Trump that he would put the death penalty on anyone who made fentanyl. And now he's actually subsidizing them. And that's just, it's just so wrong that Donald Trump is just, he's not going to stand for it. And he's got to hit them with the only thing he can
Secretary
do,
Lutnick,
which is economic
on China
penalty.
as well. On China as well, what about the 301 tariffs that were put in place under Trump 1.0 and then carried on to the Biden administration? That's about 25%. Are those still in place? Do they get added to this cumulative number?
They do indeed, but those are on specific product segments, and those still are as well. Autos are not.
So we're talking about 79. So we're talking about 79% for some imports cumulative. We're talking about a 79% tariff from China. Is that accurate?
On certain products, that could be true, sure, but they've got to stop.
The
fentanyl.
UAE.
All they have to have is a phone call. All they have to have is a phone call from President Xi to President Trump saying, I'm going to end fentanyl production that's killing Americans, and it drops 20%. I mean, that's a pretty inexpensive phone call, but you have to make the decision. You're going to stop killing Americans. And so far, they haven't made that decision. Shocking, but they haven't made that decision. And you really got to think about that for a minute. Think about that for a minute. A phone call would save them 20% on all their products, but they'd have to stop making the ingredients of fentanyl, and they refuse. Outrageous.
Has your counterpart reached out to set up that phone call between President Trump and Xi Jinping?
You know, President Trump and President Xi, they have their own way. They're not going to be, when that phone call gets made, I don't think they're asking me to set it up. I think that's above me.
Mr. Secretary, does that tell you something about maybe the leverage you think you have, perhaps you don't have, over the Chinese? The fact that they aren't reaching out, they aren't doing those things, despite the fact you've put tariffs up as much as you have?
Well, we'll see. Remember, these tariffs are just going into place. And, you know, I think they will have that phone call, and they will have lots of conversation together. I think, for me, the greatest thing for me is that Donald Trump is sitting behind the Resolute desk in the Oval Office, and he is the greatest deal maker, and he will decide how he wants to play his hand. But the way he's played his hand now is, he's been talking about this for 35 years. He wants to reorder trade, to have the world stop exploiting us, to bring the factories back, to bring employment back. You know, no one thought about when NAFTA, which he called yesterday the worst trade deal ever, what NAFTA did, it gave Canada and Mexico sort of the economic right to be a state of the United States without paying federal tax and without respecting the Constitution. But you could build in Mexico and drive to Texas, and build in Canada and just drive across the border. It was all fine, and no, you know, economically equal to being Alabama and Georgia.
Yeah.
And so what happened is our manufacturing left America and put those Americans out of jobs. And Donald Trump wants to bring back factories, bring back those jobs, and they can come back. $5 trillion worth of commitments to bring back those jobs is pretty unbelievably impressive. And that's what Donald Trump's capable of.
Also impressive is the sell-off this morning. And a big question the market's asking, how much pain you're willing to tolerate. The S&P's down by 3.7%. The dollar's being sold quite aggressively. Against the euro, we're seeing one of the biggest moves we've seen in the last decade. Mr. Secretary, how much pain are you willing to tolerate? How much market pain are you willing to tolerate?
Donald Trump is focused on the economic pain that the United States of America has suffered over decades. Since NAFTA, 90,000 factories, not jobs, factories, 5 million high-paying jobs gone overseas. He's focused on the U.S. worker and the U.S. economy. And what's going to happen is people are going to realize it is the great American economy that is the winner here. And anyone who doubts it, and anybody who shorts Donald Trump Trump or anybody who doubts the strength and the power of the American economy is making a foolish bet. Sure, importers are going to have a tough time figuring out what to do because they went and found the cheapest production in the world. It's time to bring that production home, to have the smart, amazing people who run American companies figure it out, bring robotics back to America. And I would say that United States domestic growth is going to have the greatest resurgence ever under Donald Trump, and that's what he has set in motion yesterday.
You'll accept it takes time to engineer a supply-side response, though, sir. And in the meantime, you can see bad things happen. Do you accept that?
Well, what I can accept, of course it takes time to build factories, but companies understand how to do it. They will do it. The United States of America is the greatest economy in the world. People have to do business with it. The rest of the world will bring down their trade barriers, and you'll see a great resurgence in our ability to sell agriculture overseas. You'll see factories being built here, and that factory production will be faster. So sure, there will be a rebalancing of those who make things in cheap labor markets, figuring out how to make them here. But ultimately speaking, and I think in much less time than you think, the world will reorder itself, will figure it out, and the United States growth rate will turbocharge compared to the rest of the world. We've been too close to them because we've been, our presidents have been presidents of the world, and Donald Trump ran on the policy that he was going to be the president of the United States, of the workers of the United States, and he was going to place American workers first. And that's what he did yesterday, and that's what everybody's feeling. Those workers have been disrespected, and now they're going to be respected.
Mr. Secretary, just a final question, if we may. Any calls scheduled for today with the Europeans? Do those negotiations start this morning immediately? Can you give us a sense of things?
Absolutely. Our teams are talking to all the great trading partners today, and we are available for our great trading partners every day. It is time for them to do deep soul searching of how they treat us poorly and how to make it right. It is time for them to do that. That is going to be difficult for them because they've taken advantage of us for so long. They should just be disappointed that the free ride is over. It's time for them to be realistic and to change the way they look at the United States of America. And I think that's going to happen starting today.
I think it's changing in real time, sir, in many ways. Mr. Secretary, appreciate your time. The U.S. Commerce Secretary, Howard Lutnick, on the trade tariffs announced overnight from the United States of America. Anne-Marie,
Alrighty. That was, I think, pretty well spoken on Lutnick's part. Yo, Trent. Nice to see ya. And also, thank you, Guy Wealth, for that. Thank you very much. So, what's the damage today? Well, the damage is we had the largest move in a decade on the euro dollar, and very conveniently in yesterday's stream we were using my indicators and they signaled to buy. Just some positive yield spread moves, and I was able to catch it, at least for myself. So we had a pretty good day, personally. Pretty good day. Everything is getting strong against the dollar. We can look at the dollar index here, and you can see it's fallen off a cliff. It's been falling since the beginning of the year. And that's where we are right now. The S&P is down. It gapped down. NASDAQ is also down. The Dow is down quite a bit here. But also global equities in general are also down. The Japanese have been getting hit. The UK gapped lower. So far, it's a green candle right now, but they gapped lower here. Euro gapped lower, red bar. CAC, which is the French equity index, gapped lower, red bar. DAX, or not DAX, the German equity index gapped lower. So global equity indices, and this is New Zealand is the only one that's actually doing pretty well here in the entire watch list. It's the only one that's green here. Australia gapped down, doji looking bar. We can also check out Apple. Let's go and check out pre-market. You can just see how hard Apple got hit going into aftermarket trading and now pre-market here. And in a couple minutes here, we're going to be getting a new bar. And then it'll be one more hour until the markets open. Let's go ahead and check out some commodities and Bitcoin. Gold actually fell lower. Oil fell a lot lower too. But I think oil could go into the 42. No, not the 42. The 62, 64 spot. We were looking at it here. Set an expectation for lower based on our dots. Another indicator. We don't need to check out the bonds at the moment. And Bitcoin seems to just be holding on right now at 82, which it's been hanging around this whole area for the last month. We'll see how well Bitcoin holds up. We'll see how well it holds up. But Ripple getting hit, Solana getting hit, Cardano getting hit, and Ethereum also getting hit. So it looks across the board risk off. FX seems to be kind of the place to be at the moment if you are risk on. However, now things have moved so much in the FX space, it's going to be, this is, chasing, right? And chasing usually is not the smartest thing in the world. So do whatever it is you know is safe and good for you to protect your capital. So if you already got exposure and you're getting hit hard, see how much more pain you can take. That's the damage. Also, these are tail risk moves. We can bring up the distribution and you can see we're past the 99th quartile here in the distribution here of where most tops for a given trading day comes in. It's, once you're past this spot here on the chart, you're already in the tail of the distribution. This is the equivalent of trying to trade effectively a falling knife if you don't know what you're doing. Yeah, man, I was actually having some fun. I was chilling, playing a little bit of Ultra Kill, and I had this chart open on a separate monitor. I'm like, okay, it's just going up, and it keeps going up, and it keeps going up. And then I saw it jump to 111.50. I'm like, okay, what the heck is going on? At that point, I had to stop what I was doing and get ready for the stream and all that. But yeah, that's the damage. Let's go ahead and see if we get any more information coming down the wire here. The next major event is going to be S&P Services PMI final for the US, and kind of honestly more importantly, the ISM Services. Those, the ISM Services will have fresh new information. There's no flash and final for the ISM PMI like there is for the S&P Global PMIs. So when the ISM Services PMI prints, that's just how it is. So that's going to have a larger market moving potential. And if it comes in lower than forecast, it's already expected to come in lower than the previous. But if it comes in at like the low 52, we can go ahead and bring it up here on the economic calendar. Oh, look, Canada Services PMIs, composite PMIs. So here's ISM Services PMI. Prior 53.5, forecast 53. If we come in, this prints in the low 52s or below that, we could see US equities get hit harder and the US dollar getting hit even harder. That would be my expectation, at least for today. Yeah, man, all this stuff still is looking pretty bad here. Equities continue to fall here. Not looking great. Not looking great. I don't have too much more insightful, commentary to add here at the moment. I'm kind of speechless, right? I keep looking at this euro dollar move and I'm like, wow. I'm just glad I caught it. I mean, guys, I'm here. If you got questions, now is a really, really good time to be asking questions. Really, really, really good time. Also, if you are in the trading group, you can hop into the stream voice chat. You'll be deafened when you first hop in here, or muted when you first hop in here. So just go ahead and let me know. Looks like we got a scam that's reported here. But yeah, if you're in the trading group and you want to hop on stream and ask a question, you can. Man. I just keep looking at my running P&L and I'm getting, fuzzy feelings. It's like, oh man, very rarely are you up 250 pips on the day. I mean, the last time I did like a really, really phenomenal euro dollar trade was in getting this short here. And then I perfectly also day traded the US presidential election, which is this bar right here. And that was 200 pips. So for reference, today from open to close, currently Eurodollar has moved 238 pips, according to the watch list there. The move we had in favor of the US dollar was 200 pips, pretty much on the dot, from open to close. The move we have today is the largest single day move in this currency since 2015. This is huge, huge, huge. And I day traded the US presidential election like spot on. I did really good trading that one. But I also had shorts that I was holding on it for like a month and a half before. I was riding that whole thing down. That was really, really cool. And then the earlier tariff calls over here, I was able to trade this, and I traded that. Both of these were the 2 tariff run-ups. So this is the February tariffs, and this is the March tariffs. So I traded both of these events really, really well. And I'm now 3 for 3 on actually making money on all 3 of the major tariff events so far within Trump's first 100 days in office. I don't know, man. I think I'm doing pretty well here. For any imperfections I might have in some of my trades or getting stopped out on a couple of things, I seem to be getting the chunk of the move in the assets that I'm watching. At least most of them. I seem to be doing pretty all right for the approaches that I'm taking. So I'm very happy and grateful for all that. I'm very, very happy and grateful for all that. At some point, when there's more people in the chat asking me questions, maybe I'll go on a rant about stuff like self-determination theory and whatnot. I said I'd go on a rant about that sometime. Someone was asking me to go ahead and do that. But I am just kind of in awe and appreciation that I'm able to do this, that I'm able to do this on my own with tools that I've made. Sure, I don't think my commentary is always like 100% spot on, but honestly, whose is, right? Everyone just tries to do their best. I think I'm doing pretty all right here, at least for myself. If you guys want to tell me what you guys are doing, we can pull up some charts of assets you guys have exposure to, and I can give my thoughts on them. But other than that, this has been an insanely eventful day, and it's not even close to being over. Eurodollar just went back up above 111. Oh, man. Feels good. It feels good. Here, I have a little clip we can play to get people pumped up here for the day. Let's go ahead and pause the music here. One of my favorite clips.
Change. Think big. Think positive. Never show any sign of weakness. Always go for the throat. Buy low, sell high. Fear, that's the other guy's problem. Nothing you have ever experienced can prepare you for the unbridled carnage you're about to witness. Right. Super Bowl, the World Series, they don't know what pressure is. In this building, it's either kill or be killed. You make no friends in the pits and you take no prisoners. 1 minute, you're up $500,000 in soybeans, and the next, boom, your kids don't go to college and they've repossessed your Bentley. Are you with me?
Yeah, we gotta kill him, motherfucker! We gotta kill him!
Oh, man. I love that clip. It's so fun. Let's turn the music back on. Yeah, man, I'm having fun. In the right trade, at the right time. All recorded, all on stream. I mean, I'm positioned. My portfolio is all set. I'm having a ball. I'm having a good time. Oh, man. Yep. Hello, Ari. Man, I wonder where Harold is this morning. He's usually here by now. Harold's late again. And thanks, Trent and Wealth Academy. Thank you guys for hopping in and tuning in. Appreciate each and every single person who does hop in. These streams are still quite small, but you know, I keep looking at the analytics on the channel, man. They're doing pretty well, especially compared to historically. Channel's growing, subscribers are coming in. Just gotta literally just keep doing this. Pretty soon we'll have a nice, stable group of guys who kind of all know each other, hanging out here in the live stream. And we'll have some more thoughtful conversations when, you know, shit isn't hitting the fan. Do. Ah, man. Yeah, here's a interesting question. Here's what's on my mind. Are we gonna make a new high? Damn. Alrighty. Yeah, I mean, I can just sit here and watch this and have financial juice on in the background and chill. And of course, if anybody wants to hop on into the stream voice chat, all's well. Do. Let's see here. Anything new in the research threads? Yeah, we have some new posts in Trump Watch. Do. All right. Couple of Trump posts. Nothing crazy. Oh, man. I'll go ahead and hang out in Discord, maybe hang out in a few voice chats, see what everyone else is up to today. But I'm pretty satisfied with the stream where it's at right now. I've had a good time. We've mostly listened to Nick for most of this stream. And that's all well and good. It's important to listen when there's a political figure someone like Letnick or Dissent or Trump who's speaking live, I always try and get the links to those live streams shared into Discord as quickly as possible, at least as soon as I'm aware that they're up. But I'm just very happy that there are other guys in the Discord, in the Plan the Profit Discord, who are on top of it. And if I ever fall behind, there's other guys who are just as diligent, watching for those links, watching for those news events, posting them when they come out. Yeah, man. We can do a poker after stream now. So how about this? If you want, come hang out in here. In the trading room. Mute and deafen myself preemptively. Come hang out in the trading room. Here in the Plan the Profit Discord. And let's go ahead and start an activity here. Poker. So anybody who wants to hang out and play a little poker while we watch some charts, go ahead, hop on in. That will be the stream for today. I'll go ahead and call it. So I will say thank you guys for watching. Of course, if you've watched this far, you've already liked and subscribed. And I will see you all in a bit.